You are listening to chartingwealth.com for Wednesday, the 11th of April, 2018. We see that stocks are up big for the day. 20-year bonds down, gold up. Let's jump first into the S&P 500. We follow SPY, the exchange traded fund that follows this index. We see so far this week we have a green spinning top that's forming. Now again, it's just 2 days into the 5-day candle, but we slowly see the derivative oscillator losing downward momentum, price percent oscillator going flatter as the week is progressing. Hasn't happened yet. We don't make a call until that occurs, but we've broken through as far as price action goes on this first 2 days of the weekly trend line. We have broken through it as far as that price action goes. We look at the 2-day chart. What do we see? We see the 2-day chart is now 3 up candles, 2 strong up candles as depicted by the open green box. Price did penetrate during the day the weekly trend line, but the 2-day candle itself is still below the weekly trend line. Of course, well above the 2-day trend line. Derivative oscillator losing momentum, price percent oscillator heading up. No crossing yet, so still confirmed down move on both the weekly and the 2-day, but getting closer and closer. We look at the 4-hour chart. Of course, it crossed over going up all the way back on Wednesday, the 4th of April. Went up for a day and a half or two and then sort of sideways. Since then, it is regaining what it lost after it topped out last on the 5th, Wednesday the 5th, so it's getting up close to that again. However, derivative oscillator is losing momentum as the price percent oscillator is headed up. So we shall see just barely push through the weekly trend line. We'll see how long that is sustained. Now keep in mind, if there is a rollover, this 4-hour chart rolls over and starts heading down, then of course you still have the 2-day and the weekly in confirmed down moves. It would be your possibility to jump in and ride that baby down. So keep that in mind. Hasn't happened, may not happen, but if it does, be ready to ride that gravy train on a down move. And like we said, you can look at purchasing in your virtual trading account something like SH, which is the exchange traded fund, the ProShares Ultra short of, it was the ProShares short of the S&P 500. And it tries to parallel, it goes up when the S&P goes down. So again, keep your eye on that if you do have the possibility of jumping in a trade there. Okay, now we're going to go back to our charts, going to go to the Qs on the weekly. So NASDAQ 100, it has also had some upward movement in price. Big up day, 2.21%. So far we see a green up candle, not a real strong one, hasn't pushed through the weekly trend line. Derivative oscillator still a lot of downward momentum, but is losing a little bit of that. Price percent oscillator headed down, not quite at the same strong clip it had been over the prior week so far, 2 days into the latest 5-day candle. What do we see on the 2-day chart? Well, we see the 2-day also moving up. We have a decent-sized green candle, still has a wick on the bottom, so there's some downward pressure there. Price movement is well above the 2-day trend line, but below the weekly. That's on the 2-day chart. As we look at the 4-hour, we see it moving up. It has not quite recovered from where it peaked out back again, just like we saw in the S&P on Thursday, the 5th of April, but trying to get there. Price movement still below the weekly, above the 2-day. So again, if there is a big rollover, and again, we've got the derivative oscillators continuing to gain momentum as the price percent oscillator is, so don't know that that's going to happen, but if it does, be ready to jump in and ride that baby down on a virtual trade. Okay, back to the weekly chart, moving on to TLT, the 20-year bond. What do we see going on there? Well, the derivative oscillator is gaining upward momentum. Price percent oscillator still headed up. As far as price movement goes, though, it's below the weekly trend line and below the 2-day trend line. So again, not really strong there, but the derivative oscillator and price percent, our indicators are strong, whereas our Heikin-Ashi candlesticks are not that strong. We dig a little deeper. We see on the 2-day chart a real sideways slide there. The latest candle is a green doji, which means lots of indecision, tending up, but again, pretty weak. We just really have a sideways slide going on. Price movement is above the weekly, below the 2-day, and the derivative oscillators losing energy. Price percent oscillators going flat on that 2-day chart. What do we see on the 4-hour? 4-hour still below. So again, we do see the derivative oscillators crossed over, so keep your eyes on it. If you do have a crossover going up, then of course keep in mind the weekly and the 2-day are in up moves. So if that 4-hour chart crosses over going up, then you might look to jump in there. It may not. The fact that the derivative oscillator's already crossed over is typically a good sign. If you look back in time, that derivative oscillator sometimes portends up moves, although as we always teach, when the derivative oscillator and the price percent oscillator cross over together going up, that's usually the best for sustained movement. So we'll continue to keep our eyes on things. Back to the weekly, on to gold. What do we see on gold? Well, on the weekly chart, gold, of course, is still in a confirmed down move, although it does appear with this latest, we have, again, another day of some up movement, 0.24%. Nothing compared to the 2.21% of the NASDAQ 100, but still an up day for gold. So far an up week. Derivative oscillator losing downward momentum. Price percent oscillator still negative, but appears to be getting closer to the red signal line. We'll see just how that ends up finishing the week. We do see that the 2-day chart has bounced off. The price percent oscillator has bounced off the red signal line, but the derivative oscillator continuing to lose upward momentum. We do have a green candle with a long wick on top, a little bit of a wick on the bottom. And as we dig a little bit deeper in gold, we see that the 4-hour chart crossed over in the morning on Tuesday, the 10th. And again, we've had about 2 days of decent up movement so far in gold. We'll continue to keep our eye on gold. Again, just keep in mind, the 2-day is up, the weekly is down, so we don't technically have any jumping in or trade there. And this 4-hour chart has not been awfully good to us lately, so we're not trusting it as a total trading chart like we have been able to do in the past. So again, on gold, we're just holding. On TLT, remember, we're continuing to keep our eye on things, see if we see a rotation over on that 4-hour chart going up. And on the Qs, the NASDAQ 100 and on the S&P 500, we're waiting to see if they are going to roll over going down for an inverse play. And if you don't know what I mean when I say inverse plays, please go to our website or to our YouTube channel and check out inverse ETFs, how to make money when markets crash, and listen to that short video. It'll help cue you in on what shorting is all about. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.